Hello and welcome back to The Note. The weekend's developments in Crimea add up to perhaps the most scary political situation in Eastern Europe since the fall of the Iron Curtain more than 20 years ago. So what has the effect been? On Monday morning, stock markets across Europe were up, and they were particularly up in Eastern Europe and Russia. Plainly, this very difficult political situation will create both great risks and great opportunities. With me now to try to map those risks and opportunities is the chief economist of East Capital, which specialises in Russia and Eastern Europe, Marcus Svedberg. Marcus, thank you very much for joining me today.
Thank you.
Let's start by taking a look. We tend to think of the emerging markets as one great entity, and we all know that there was a dramatic reaction across emerging market currencies when the Fed started talking about tapering last year. How does the ruble fit into this picture?
Yeah, you would assume that the ruble would have been one of the stronger ones. Current account surplus, large reserves, not part of the fragile five at all. But as you can see here, the ruble did not fare very well at all. It developed similar to the Turkish lira, which is one of the more vulnerable ones. So this was very counterintuitive.
And plainly, all of this was before the situation in Ukraine became as scary as it has done in the last
Most
few
of
weeks.
this, actually, since beginning of March, it's difficult to see here, but the ruble has been fairly stable. Although the central bank has been defending it, had been rising interest rates.
So are we wrong to be so concerned about current account deficit countries, about fragility? Is it more about politics then?
I think politics is an important element. And when it comes to the ruble, there are many different factors that played a role. The current account surplus was coming down, capital flight was increasing, Russian growth has been disappointing, but it was not tapering as such that affected it. But I would say it is a combination of politics and vulnerabilities. And in case of Turkey, I think that is the case. It is fragile, and there was a lot of political developments in Turkey.
Okay, now let's move on to the short term, the last few weeks, how this might have played out in stock markets. And we can see, obviously, not surprisingly, Russia has taken a pounding. Perhaps more surprisingly, there's various other Eastern European countries that have actually gained very considerably, with Bulgaria right at the top of the chart. Yeah. What's been going on in these last few weeks? How does one actually play these smaller Eastern European economies?
Yeah. Bulgaria is actually very hard to play because it's a very, very thin stock market. But I think we can, if we take these together, we can also add some of the smaller Baltic markets which have been doing quite well. Not only beginning of this year, but also throughout last year.
Right.
There's a frontier market focus, not only in Eastern Europe, but globally. Investors like frontier markets, especially frontier markets that have been doing their homework, coming back to growth. Some of these markets are benefiting from the Eurozone coming out of a recession. They're viewed as a geared proxy. So, and they have been a little bit away from the limelight as well. Whereas the ones we see on the bottom, Russia, Hungary, Turkey, the common denominator is that there's a lot of politics going on here. In Hungary, we're having elections in April. This is a government which have introduced a number of market unfriendly policies towards the banking sector. So in Turkey, we're having several layers of politics, which is making the short-term outlook very unclear. And in Russia, we all know what's going on with the political development there.
Okay, now in the case of Russia, it was, by any sensible metric, the cheapest major emerging market at the beginning of the year before it took another 20% tumble. Yeah. What kind of catalyst is going to be needed to actually get it to re-rate? How does it actually, it's cheap compared to assets, how do we actually get a fair valuation again?
I think one has to divide in the short term and the longer term perspective. In the shorter term, I think a resolution to the crisis in Ukraine. The market is up today, but I think that's more a reflection that what happened during the weekend was priced in last week when the market was coming down.
Right.
But a more longer term solution, a broad solution that would reduce some of the uncertainty, that would reduce the tail risk, that would help the Russian market to re-rate in the short term.
Right.
More longer term, I think Russia has to show that it's serious about reforms. I don't agree with those that are saying there are no reforms in Russia. They've done a lot of monetary reforms, fiscal reforms and so on, but they need to adopt a more broader reform agenda, fighting corruption, improving the investment climate, improving the business climate to have a more longer term, more substantial re-rating.
Okay, and you need a democratic force to make that happen, presumably. You need to get the middle class agitated for such reforms to come through. They don't appear from here to be a priority at the moment.
No, but to me, the fact that Russia is so rich, has such a large middle class. The World Bank actually reclassified Russia as a high-income country a couple of weeks ago. And these, we have seen over the past couple of years, especially during the last elections, that this middle class is becoming politically assertive. They're going out demanding reforms. In the last couple of weeks, we haven't seen them much, but I think this is an underlying driver for change for Russia.
Okay, one final question, impossible to ignore at the moment. What about the poor old people in Ukraine? They appear to be being pushed or pulled in two directions at once. What kind of a sensible resolution do you see economically for Ukraine?
I think it's so sad it has come to that Ukraine has to choose one or the other, Europe over Russia. And I think this is partly the fault of both Moscow and Brussels. Why do they have to pick one or the other? They should have good relations with both their big trading partners.
Right. Okay, Marcus, thank you very much indeed. This is the point where I have to come up with a market read-through from all of this. At a time like this, markets don't seem particularly relevant. In the short term, if you want to bet on Eastern Europe, you can. It's obviously very speculative. In the longer term, there are possibilities to make great returns if political reforms happen. But plainly, it's a big if.